the expectations versus the report. To me, it looks like, look, analysts pretty much nailed it. Maybe they should get a gold star this morning.
Well, you're absolutely right. When we look at a company, when they beat and raise by this level, they grow revenue 122%. Their most important segment growing at 155%. Normally, that would be time for investors to cheer. But because we've become so accustomed to perfection from Nvidia, where there's 3 quarters of over 200% revenue growth and incredible beats and also raises, the stock being priced to perfection, investors are selling it off this morning. Actually, it's come back in, to your point, from some of the earlier lows. And I think, again, this is an example where expectations, because the market was so heavily influenced by Nvidia being the king of AI, really any negative news was a sign for investors to pull back on the name.
Yeah, or just take the money and run with it for a bit. Sarah, how is Nvidia's report influencing how your strategy will develop over the day?
I mean, I think the reality is, and I've been saying this for a while, this is a good company, but it's not as ahead of the competitors as it used to be. And we see that in the forward price guidance, I think. The reality is that Intel, Google, all these other tech names that also design great chips, they are certainly catching up. There's lots of talk of new things they're going to be releasing this year. And it doesn't help that Blackwell is still not here, right? It seems like it's going to be great, but they need to get Taiwan Semiconductor and some of those other fabs to actually manufacture it so that we can see where the sales are.
But they said that they were going to be shipping in volume in the fourth quarter. Was that not enough for you, Sarah?
In the fourth quarter and then through 26, I think that we're seeing a little bit of that those wiggle words there. And even then they're talking about, sort of kicking it off. What we're not seeing is them coming out in force saying it's here, it's shipping. We know that the demand is there in part because if you want to stay in NVIDIA's good graces, you have to keep buying their new chips. But we haven't actually seen that they're going to be able to manufacture them at speed. I don't think that there's a problem with the chip. I think that there's potentially a little bit of tension between them and their manufacturers of, hey, maybe pay us a little bit more, we'll work a little bit faster, and you can get your chips out sooner. So I do think that those chips, those new launches are going to be an area to watch.
Dave, we got a lot of color commentary, not only on the Blackwell chips and the delivery and the demand for Blackwell, but on Hopper as well, and the way that customers who are making the investments in Hopper might anticipate a return on that investment.
Yeah, that's been, of course, a big focus this earnings season. Is actually, we know particularly NVIDIA's largest customers, which are some of its fellow Magnificent Seven members, Alphabet, Amazon, Microsoft, Meta. They're plowing all of their CapEx, or a great portion of it, and increasing that CapEx into generative AI, into AI, and of course, into NVIDIA chips, because I do think, again, for the time being, they have such a lead relative to their peers. Everyone wants these chips because they need them to build these large language models. And now I do think there's been too much focus on ROI, because we know companies, look at Walmart most recently. That's a household name, not a name you'd associate with AI. They're using it to make the buying experience easier for consumers and also for their employees to navigate their HR system. And then even on last night's call, we saw examples of how companies like ServiceNow, SAP, Amdocs are using AI now. So I think what we're still seeing is that we're at an inflection point for enterprise AI. Companies need to continue to plow in money to build this. And for the time being, NVIDIA is going to be the big beneficiary because they have a lead both with Hopper and then with Blackwell coming.
Sarah, we heard on the call from the CFO that China is an area of concern, that the data center grew in the second quarter, but that revenue from China was down 17%, or was down to 17%. So tell me what that indicates to you about the broader picture in China, what it means for the tech sector.
It's going to continue to be tough to sell into China. I think until we are into a new administration, we're not going to be sure exactly where those fault lines lie. And so, they're certainly not inoculated against it. But at the same time, that's not something that just impacts them. We see that when we talk about Apple. We see that when we talk about, there are massive tech names that aren't in China at all, and they do just fine. And so I do think that's going to continue to be a line for them to walk. One concern that's massively, I think, starting to abate is the concern around China and Taiwan Taiwan and Taiwan Semiconductor. And so the ability to get these chips made in Taiwan, that's lessened. But the question is, how much can an American Silicon Valley-based company sell of their cutting-edge chips to China? And I don't think we're going to have an answer for that for at least another 6 months to a year.